Good afternoon. I'm Carol Harmer from the International Trading Institute, and yes, I know it's Saturday, but what I would like to see you do is this. When the market is closed, obviously at weekends, and we all go Friday woo woo, what I used to do, I used to spend not long, say 3 hours, 3 to 4 hours over the weekend. And what I would do is I would go through what the market had done for the week, what the trades had been like for the week. Had I made a profit? Hadn't I made a profit? What trade should I put on? What trade shouldn't I put on? All that sort of thing. Or as you get more experienced at it, it's mainly going over and finding out what you don't want to be wrong-footed on a Monday morning. So my idea was to spend Sunday going through all the charts that I look at, and some even that I didn't look at, because patterns will come up during the previous trading week. When the market is in full flow, sometimes it's difficult for traders to take stock, if you like, and sit back and not be surrounded by noise. Well, the weekend offers you that opportunity, so that if you can just take that 3 to 4 hours out of your weekend and just go through the charts on a monthly, weekly, daily basis. If you can go through those and pick out levels, strategic levels, like you would want a Fibonacci to tie with a moving average, to tie in with overbought, oversold indicators, to tie in with something else. The indicators that you use, and there shouldn't be too many of them. In fact, on a Saturday or Sunday, it's probably best to wipe your chart clean and just look at the chart. If you do that and just look at the chart, you will find that there's many patterns that jump out at you, and this is what we want to be trading on. At International Trading Institute, what we hope to be doing is teaching you not the basics of trading, but the little secrets of trading, the little nuances of, every market's different, because it's run by different central banks. So when you trade for a Swiss bank, you know what the Bank of Switzerland is going to be doing. You know the SNB is going to react this way if X happens. Same as if you work for a Japanese bank. I work for Nomura, therefore I was always on top of what the BOJ was going to be doing. Everything's against the dollar, so you're always looking at what the Fed's going to be doing. And that isn't to say that you're looking at them from a charting point of view, because you're not. But I do think you have to be aware of what the banks could actually do, because they move the markets, and you want to be prepared for them. Now, they have teams of people. I know I was part of a team. They have teams of people who are analysing every day all the markets, and to keep up with them, you need to do that as well. Now, you're not going to be able to do that if it's a normal trading day. There's things that you need to look at. You need to look at the correlation between the markets. You need to look at pattern recognition. I would say is the most important thing that we're going to teach you, as well as market psychology. Because unless you have that psychological mindset, you're not going to progress much further. We don't use the shoulda, woulda, coulda. We do did we take that trade or didn't we? If we didn't take that trade, why did we not take that trade? Was there a reason that you didn't take that trade? Write it down. So the weekend is for reflection about what you've done the previous week, but more importantly, what you're going to do this week. You need to have your strategy in place for whatever befalls us on a Sunday evening. I personally never looked at Asia opening. You work long enough hours, so I never personally looked at that. But many people did look at that, and it helped them a little bit, but it's a bit hit and miss. So I wouldn't worry too much about what Asia does on a Sunday night, because normally they're really waiting to see what Wall Street does on the Monday. So Monday morning can be a bit hit and miss. However, if you have your strategy in place, i.e. all your levels, all what you want to do, your Fibonacci is put on in the correct way, and just write it down. I mean, yes, I'm a dinosaur, but I still use paper. I still use it. I write everything down. I've got books and books and books of it. And it's not that I'm going over my trading ability. It's not because I'm going over, what trades I should have done, what trades I could have done. It isn't like that anymore, because don't forget, I've retired. So yay. But what you need to do is you do need to have a plan in place for Monday morning. And Monday morning, having your plan in place isn't good enough. You need to take that 2-3 hours out of that weekend, and you need to work at it. People will tell you trading is easy. I'm here to tell you it isn't. Okay? It isn't. And 90% of traders will fail. That's just the statistics. They will. Now, they're the retail traders, so we're not going to go down that route yet. But 90% is a huge percentage of a market that can fail for no reason. And the reason that they fail is that they are looking at too short-term charts. They are looking at things that they shouldn't be looking at. We've got little things off Twitter and little things off Facebook and little things off of any other social media platform. And as I've said to you before, traders do not put their trades on Twitter. You don't. I mean, if I had a really no-brainer one that I felt was really important, I would post it to my Twitter account. But by and large, I didn't really put trades out at all, because it's personal to you. It's personal to your trading style. It's personal to your bank balance. It's a personal thing to you. However, to have a trading strategy for a Monday morning is really a good thing. It gives you clarity. It gives you, when you get up at 6 o'clock in the morning or whatever time, you'll know what levels the market is going for. Always put in the weekly pivot. Now, the daily pivot on a Friday, because Friday's a bit of a hit and miss day, and usually traders go away on a Friday afternoon, and interbank closes at midday, and you don't really have a lot of volume, I don't think, late Friday, unless there's something really important coming out, and then you do. But what I would like to see you do is put your weekly pivot point on, put your daily pivot point on. Your monthly should already be there, and be there until the 1st of June. And you'll find that at some time during that week, the market will gravitate towards that pivot point, whether that's high or whether it's low. It really doesn't matter. As long as you know what the market is aiming for, then you've got an edge, and all traders want an edge. It's the way we work. It's the way we rock and roll, I suppose. It's just the way we do things. You're always trying to get that edge, And it doesn't matter if you miss the first couple of points of that move down or up. What it matters is that when the market reaches a designated level, what are you going to do with it? So for example, if the market weekly pivot point comes down under where the market closed, you should find that on Monday afternoon, Tuesday morning, the market will go down and kiss that area. Now, it doesn't have to be an exact science, and I think this is where a lot of traders go wrong. You expect it to be an exact science and to hit that level exactly. Very rarely happens. You've got to put it within a band. So within this band, you would be either a buyer or a seller. The reason for doing it on a Saturday or Sunday is that you've got no distractions. You can just take yourself off, sit yourself down, go through what's happened the previous week before that. Just go through, look back through your book. If you haven't got a book, start a book. Go back through where the market stopped. Look at the highs and the lows. Look at the midpoint. Look at where the open and the close was. There's a lot to take in, but you can see it visually on a candlestick chart, which we didn't have, I have to say, when I started out. But if you can do that, then on the Monday morning, you're not running around like a headless chicken. What you're actually doing is you know what your strategy is for the week, and you sit on your hands and you wait until this strategy comes around and hits your targeted area. When I say area, I don't mean the exact level. I mean in that, I don't know, if it's FX 10, 30 pips band. Okay? All we want to do is try and help you trade properly, like a professional trader. And that is our aim. That is the be all and end all, is to handhold you through these tumultuous times. So I hope that you've enjoyed this little video of me on a Saturday afternoon, and I hope you've taken notice of what I've said, because it really is important that you just take that time out and it's closed, analyze, look, what do you see, what do you feel, okay? Because another thing about being a good trader is the gut feeling. If you feel it and the market is showing you that that is what is going to happen, then go for it. Leave tight stops, but go for it, because gut feeling is a big part of trading, and the more you do it, the more you will get that gut feeling. And that's something I can't teach you. That's something no one can teach you. You can't teach gut trading. You can't. It's an impossibility. That comes with experience, and that comes with getting burnt a few times. Alright? Okay, well, I'm going to do some more videos today, because I like to have a look through to see whether or not I can find anything that looks a bit sexy for the next week. Okay? Good luck. I'll catch you tomorrow.